All right, so this meeting is going to be recorded so that you can benefit from it later. All right, so without saying much, welcome everybody. Do we have anybody who has not seen this interface before? If you've not seen this interface before, this hourglass, this cashtrap, put some tools in the chat box, please. If you've not seen this interface before. All right, Sylvia, I see you. Sylvia. All right, great. So this is cashtrap, right? And this is what we use to analyze the market. So tonight I'm going to also be as basic as I can be. And if you feel like there's some information here that you already know, you can either leave the call and join back later or just stay on the call because you might just hear something that I've not said before. All right. So Sylvia Blessed, this is the software that the Academy provides. I hope everybody can see my screen, please. I hope you can see my screen. I hope you can see my screen. Okay, great, beautiful. So this is the software that we use to determine what trades to take and how we take the trades. In Forex, what we do are currency pairs against each other, all right? Currency pairs against each other. And what are some of these currency pairs? We have, just a moment, let this go. All right, so we have Euro, we have GBP, we have USD, AUD, JPY, CHF, NZD, CAD, and the other rubbishes. So the thing is, currencies are not traded on their own, right? They are being traded in pairs. It's one currency against the other. You get? It's one currency against the other. Let's just check. So the port. Guys, just give me a moment. It's gonna be easy. So I'm back. All right, great. So these currency pairs are being traded against each other, and that's why you usually hear things like Euro GBP, Euro USD, Euro AUD, Euro JPY, GBP USD, GBP. So it's just currency pairs against each other. It's more like you are trading naira for dollar, naira for pounds, naira for whatever currency. That's exactly what we're doing right here. All right, so let's get to how we use cashtrap because that's exactly what we're doing tonight. If you want basics on currency pair and all of that, you're supposed to attend your launch calls. All right, you're supposed to attend your launch calls. So now we're going to talk about the features of this particular software and how it functions, how we use it to take trades. All right. So now I'm going to click on the pair. This is Euro USD. Okay, Euro USD. Now we're going to talk about some of the features that we find on cashtrap. Some of the features that we find on cashtrap. We'll talk about them individually, and then we'll now talk about how we can have a comprehensive understanding of all of it, and then you make the use of them in our trading decisions. All right. So now, the first one I'm going to talk about is the Bollinger Bands. All right, the Bollinger Bands are this. I don't know why it's looking like this tonight. It usually looks thicker than this, yeah. All right, so this guy's going to this muscle-like intertwining lines, and these green ones down here. These guys are what we call the Bollinger Bands. All right. BVO, you can help me put that in the chat box. Can I may put that in the chat box? So those are called the Bollinger Bands here. And what do they do? Remember, I said we're going to talk about them individually before we now come to have a comprehensive understanding of how they work together to give us our trading signals. Yeah. So talking about the Bollinger Bands are like elastic. When price hits it, right, it bounces off. These candles that you see here is market movements. They are a graphical representation of market movement. All right. Now, let's see how this Bollinger Bands function. Look at the market came somewhere from here, right, and hits the Bollinger Band at this point. What happens? It bounces off. That's why I said it's an elastic. It bounces off. Where does it go? To the other end of the Bollinger Band. And when it gets there, what does it do again? It still bounces off. So it's more like, it's more, I won't call it a wall, because this time it's more like a beer belly. People who have joined my cashtrap training before, I would always say it's more like pot belly. Now, let's say your husband or your man has a pot belly, and then you take your fist, and then you want to punch the pot belly. The pot belly is not like a wall that when you hit it, your hand or your fist bounces back. The pot belly is elastic. Therefore, your hand can go through a little bit, but at the end of the day, what happens still returns. So it's the same thing with the Bollinger Bands. Even though price might push in a little bit, what still happens? It's still going to bounce back. And the further price pushes in, the more heavy the pushback is going to be. Take note of that. The further price pushes in, the heavier the pullback is going to be. All right. So continue noticing how price bounces off this. Here comes here, bounces off, comes here, bounces off. And now you know the use of the Bollinger Band. Keep that aside. Don't worry your pretty head about it. You're going to understand how to use it. All right. Just keep that aside. We're going to talk about next is what we call the EMA. All right. So the EMA actually has two full meanings, like I learned recently. I usually call it exponential moving average, but I also learned it is estimating moving average as well. All right. So what are we talking about here? We're talking about this red line. Give me a moment. Just give me a moment. All right, great. I'll zoom out so that you can see exactly what we're talking about. All right, look at this. Look at this line. See this red line running across. It's the EMA. Sorry, let me see what's going on in the chat box. All right, beautiful. Thank you very much, Vivio. So this EMA right now tells you the trend of the market. In the markets, we have three trends, right? What did I say? Three trends. That's what we have in the markets. Yeah. And what are those three trends? I'm going to go as basic as I can tonight. The market, we have three trends. Now, the three trends, the first one is an uptrend. Yeah. The second one is the consolidation or the sideways, and the third one is the downtrend. The third one is the downtrend. All right. So how do we identify all of these trends? Remember, we don't need to understand everything now. as I was teaching them, just get a notepad and be taking down notes. At the end of the class, everything is going to make sense. The juice is saved for the end, all right, for the last. So now, let me try to, I'm not so good in using these tools, but I'll try. Let's use this. So now, talking about uptrend, right? No, bro, no, bro, not you. All right, let me get the best to demonstrate. I'm trying to demonstrate what um, the uptrend looks like. Yeah. So this is how the uptrend looks like. The market moves up, right? Moves down, moves up, moves down, moves up, all right, moves down, and that way, can you see what the market is constantly doing? Now, how do you know uptrends and downtrends? Now, this thing I'm about to say is, you might get you a little bit confused here, but take note of it, you would understand it. When the market is constantly making higher highs and higher lows, it is in an uptrend. What do I mean by higher highs? Look at this structure I just drew out now. This is a high, right? Where's the next high? This is the next high. This high is higher than this high, and therefore this one is a higher high. This is another higher high, and this is another higher high. Now look at the low. This is the low of the market, but this is a higher low, and this is a higher low. So I say, when the market constantly makes higher highs and higher lows, it's in an uptrend. It's an uptrend. Now, let's delete all of this. Let's delete all of this crap. Let's delete all of that, right? Now, what about downtrend? Downtrend is just the opposite of what we just made now. When the market constantly makes lower lows, right? The market constantly makes lower lows and lower highs, all right? What do we mean by that? We have all night, so if you're feeling sleepy, go and wash your face. So now, what do we mean by lower lows and lower highs? The market starts up this way. Let's see. Starts up this way. Comes down. Goes back up a bit. Comes down. Goes up a bit. Comes down. You see what the market is constantly doing? Market is constantly creating. This is the high, this is the high, but you see that each high is becoming lower high. This is a high, this is a lower high than this one, and this is a lower high than this one, and this is a low, this is a lower low than this one, this is a lower low. So therefore, we see when the market is creating lower lows and lower highs, it's in a downtrend. So it's very, very simple to understand. But sometimes you notice that the market is just in a sideways movement. The market is just in a sideways movement like this. You see the market doing something like this. Right? It's as if it's in a box. That's sideways movement. It's called consolidation. It's called consolidation, where the market has no direction. Now, I know we've been drawing nonsense out since we started this class. Now, let's see how exactly this works. Now, remember, we're talking about the EMA, right? Talking about this line right here. Let's not forget the point. This line shows us the trend of the market, like we've perfectly explained now, whether the market is in an uptrend, it's in a downtrend, or it's in a consolidated state. Now, this line usually changes color. When it is red like this, it means it's a downtrend. When it's red like this, you notice that the candles are usually below it, which means that it is a downtrend. And when you notice that the candles are above, you notice that the red line is going to be actually green. All right, so it tells, just looking at it, the positioning, the color tells you, oh, yeah, this market is an uptrend or a downtrend. All right, so how do we know? For example, now from this point, the market has been in a downtrend. How do I know? The line, the EMA is red and the candles are below it. So this clearly is a downtrend. And whenever the market is like this, what do you want to look out for? You're looking out for sales. If you want to buy in a market like this, it might work sometimes, but it might turn against you. All right. So whenever the EMA line is above the candles, you want to constantly look for sales because the market is in that direction. Okay. So now let's see an instance where the candles were probably above the EMA and see how that affected. Now, when you see this EMA in between candles like this, it means the market is consolidated at that point. Now you see at this point from here, the market had no direction. It was just moving up, down, up, down. And that is why you find the EMA line in between the candles. You see that? It doesn't matter what the color is. As long as it's in between the candles, it's consolidated. Now let's see an instance where the candles were above. Now look at here. This same line that you're seeing as red here, can you see that at this point it's green? Why? Because the market, the candles are above it, which means that this is an uptrend. So in this state, when the market is in this state, what are we looking for? Put it in the chat box. Tell me what we're looking for when the market is in this state. Put it in the chat box. If the market is in this state, what are we looking for? We're looking for buys, exactly. Yes, making sense. We're looking for buys. All right, that's what we're looking for at this point. So now we've talked about what? The Bollinger Band. We've talked about the EMA. Now, the next thing we want to talk about right now is it's also an EMA, right? It's also an EMA, but I'm just going to call it we're just going to call it the black line. All right, it's also an EMA, but we're just going to call it the black line so that you don't get confused. How is this one EMA and this one is EMA at the same time? So we're just going to call it the black line. So looking here, you notice that there's a black line in the middle of all of these candles here. It's also an EMA, but this serves as a dynamic support and resistance. Don't bother your pretty head about that. It serves as a dynamic support and resistance. Keep that aside. We're going to talk about support and resistance. And when we do, you now understand what we mean by a dynamic support and resistance. Now let's go straight to support and resistance. If you notice in cashtrap, you're going to see can you see these red lines that cashtrap draws almost everywhere? Red lines. All right, so one thing you have to take note of is that your red lines are your resistance. All right, we're talking about support and resistance right now. Your red lines are your resistance, and your resistance are like your roof. All right, when price gets to your roof, when the markets, the candles get to your roof, the roof stops it from moving and it rejects, it changes direction. Now, the green lines that you see here are your support regions. All those green lines you see, look at them, look at them. All of them are your support regions, all right? And they're like your floor, all right? When price hits your floor, what happens? It moves back up. And let's use this illustration. You buy a ball and you're playing the ball in the house. If you throw the ball up to your ceiling, it hits the ceiling, what happens? It bounces back, right? And now when you bounce the ball on the ground, on the floor, as it hits, does it stay there? It doesn't stay there. What happens? It bounces back up. All right, but then if there was like a table made of, let's say, plywood, very light plywood. If you hit the ball on the table made of very light plywood, is there a possibility that it will break, the ball will break the table? Give me your answers in the chat. Is there a possibility that the ball will break the table made of very light plywood? Is there a possibility? Yes, there is a possibility. There is a possibility. Yes. So when it breaks there, what then does it meet? It meets another flaw. And probably that flaw is the strongest flaw, which it cannot break. And then what happens? The ball has to start going back up. It's the same application in our trading. Now let's get to it. Look at this, for example. Look at this, for example. Right here, we have a support. And remember, support, a support region does not just stop at where the candle meets it. Support region extends all through time frames. All right. So if this is the support right here, in future, it's still going to be a support. All right. Now, what do I mean? For example, look at this. This particular candle buys up to this point. It hits the resistance, and what happens? If the resistance bounces it off, it starts going down. All right. Now, as it's coming down, can we notice that there was a little bit of resistance or support at this area, this same area where we had this, and we see that price wasn't so comfortable breaking it. All right, but finally it did break it. This area here, it did break it, and when it did, it met another floor, and this floor is possibly a strong floor. And from here, the market is bound to do what? Go back up. So support and resistance areas are areas where the market gets to and they reject. All right. Euro JPY, if you check the strength and Euro is stronger, you can take this trade for a call. That's by the way. So that's for those who knows what they are doing. So like I was saying, support and resistance is very crucial to our trading reach effect. All right, because we take the sell at the resistance, that's the top level, expecting that the market will come down. And we take the buy from the support, which is the lower level, the floor, expecting that the market will do what? Will go back up. All right, as simple as that. You don't need to flood your head with plenty of ideas. It's as simple as that. All right. So if you get that, please put some ones on the chat box. If you get that, put some ones on the chat box so that we can go ahead. All right. We're getting just 5 or 6 ones. That means 29 persons on this call are not really getting it. Is that what we're saying? All right, great. So now we're going to talk about, what next are we supposed to talk about? We've talked about the Bollinger Bands, we've talked about the EMA, we've talked about the black line. All right, now this black line, remember I told you before that after we speak about the support and resistance, you're going to understand what I mean by the dynamic support and resistance. Sometimes when the market hits this black line, it rejects. Sometimes it's not always reliable. That's why it's dynamic, because it can change. All right, it's dynamic because it can change. Unlike all of these guys that are stable, and you see these guys, they're stable, they're always there. But look at this guy, he has no direction. It's always changing. It's a dynamic support and resistance. How does it serve as a support and resistance? Look at this point. Just hold on. Look at this point. Do you notice that price keeps hitting on it and rejecting? Price keeps hitting on it and rejecting. Even before then, look at these candles. And you notice these candles keeps hitting there, rejecting. keeps hitting on it, rejecting, keeps hitting on it, rejecting. Same thing here. Price came here, hit on it, rejected. All right. So, but you can't fully tell when price would actually reject on a dynamic support and resistance. There is another special role that this dynamic support and resistance plays. Yeah, but I'm going to leave it for the last. All right, and it's very, very essential to both winning trades and losing trades. We're going to leave that for the last. Somebody should just remind us that we've not talked about the essential or the special thing that this black line does during our trades. So now we've talked about the Bollinger Bands, we've talked about support and resistance, we've talked about the EMA, we've talked about the black line, let's call it the black line. All right, that serves as a dynamic support and resistance. And now we're also going to talk about stochastic and RSI. If you help me put that in the chat box so that some people can get the spellings. Stochastics and RSI. Now, if you want to know what the full meaning of RSI is, relative strength index. Relative strength index, that's RSI, all right? Excuse me. Relative strength index. Now, this guy you see here, I'll zoom in a bit. Just a moment, let me make some adjustments so that it will be visible to everyone. Good. All right, great. So this first guy we see here is the stochastic. All right, this first guy we see here is the stochastic. This second guy is the RSI. Now let's talk about the stochastic. Now the stochastic has two components or three components, I would say. All right, the first component is the red line. Right, the first component is the red line, which we see up here. The second component is the green line, and the third component is the momentum line. All right, the momentum line. Now, I'll tell you something. Whenever you see this momentum line below or in the area of this green, it tells you one thing. It tells you that this market has sold to a point where it's tired and now needs to go in the opposite direction. How? Look at these candles here. These are red candles. These are selling bearish candles. All right, they have come down. They have sold. All right, green or blue candles are called bullish candles because they are buying, while red candles are called bearish candles because they are selling. Now, this red candle shows that the market has sold, but stochastic now tells us, oh, okay, it has gotten to the point where it cannot sell further. It's more like you're running a business and then you sell. You get to a point where you exhaust your items. And what would you have to do? Will you stop there? Will you stop selling? You have to run back to your factory or to your wholesale. It's the same thing. And when you go to the wholesale, what do? You buy. You're going there to buy. It's the same thing this right here is doing. It has sold. The next movement is for you to buy. And buying is in what direction? The upward direction. So this region is called the oversold region. Whenever you see this black line in this green area, it's called the market is currently oversold. Therefore, what it means is that the next wave now is upward. And I'm sure if anybody took that Euro JPY, you should be clearing by now. If you took it, please tell me you cleared in the chat box if you did. If you did. So, like I was saying, now this market has sold, stock don't finish. All right, the items in the store is finished. Now it has to do what? It has to buy. And it has to run back up to buy. It has to go to the factory to buy. All right, so it's the simple thing you're going to use to understand this. Now, at the point where the momentum of the stochastic is at this point, that's in the red area, it has overbought. So now it has gone to the factory and has packed a lot of goods into the car. The van is filled up. Will he stay there? No, he has to go back to the shop or to the store to sell. So right now, you see on this candle, when this momentum was in this red area, the market bought, but it can't keep buying forever. And what happened next? It started selling. So when the momentum is in this area, the red area, the market is said to be overbought. So you can take that down. When the stochastic momentum is in the red area, market is said to be overbought. But when it's in the green area, it's said to be oversold. And now when it's oversold, you know that the market is meant to do what? To start buying. When it's overbought, the market is meant to start selling. Now, I'm not going to start boring you with all the context of RSI, Relative Strength Index, but just know that it moves almost in sync with RSI, with stochastic, and that we always want them to be in the same region before we take a trade. For example, if we have stochastic in this red region and RSI is still playing below here, we will not take that trade. We will allow stochastic RSI to actually come in this red region before we can take that trade. All right. Now, we want to talk about one of the last components before we now delve into having a comprehensive understanding of this and now using it. All right. So if you look around here, what pair are we looking at? We're looking at Euro JPY. All right, let's highlight that. Euro JPY, that's what we're looking at right now. Let me refresh this so that we'll see if Euro JPY. Let's give it a moment to come up. All right, so I'll try to zoom in. Yeah, so actually, anybody who took that trade from when I told you to enter, you'll be clearing. You would actually be clearing. All right. So now the next step we're looking at is this. This is called the alot panel. All right. Now we're looking at USD JPY. Yeah. Well, we're looking at Euro JPY actually. So let's look at that. Yeah, it's in profits. Yeah. So now, what we want to talk about here is the currency strength. Now, when the market is oversold, and for example, we have Euro JPY. Euro is the first currency. That means it's at the top. JPY is the second currency. That means it's at the bottom. All right. Now, these two currencies are dragging each other based on strength. They are dragging each other, one another, based on strength. If Euro is stronger, it will be dragging JPY. If JPY is stronger, it will be dragging Euro. But normally, Euro is usually stronger than JPY. All right, but this is why we have the currency strength meter, because strength usually flips. Strength usually flips. Euro is called the base currency, while JPY is called the quote currency. All right, Euro, the base currency, JPY, the quote currency. So now, whenever, okay, now I can't see currency strength anymore. That's great. Let me refresh. Just give me a moment. Okay, great. Okay, we're looking at Euro JPY. Wonderful. So, if you look at the side here, you'll notice that you can see Euro 43, JPY 44. These are actually the strengths. These are actually strengths. And you see that strengths are pretty close. That means the movement is not going to be much. Remember, we want a big, if we're taking a call or a buy, we want a big movement upwards. If we're taking a sell, we want a big movement downwards. And now, if you're expecting a big movement in whatever direction, and the currency pair in that direction does not have that strength to pull the trade in that direction, do you think it will work? I need your answers in the chat box. Do you think it will work? If you're trying to take a trade to go to a particular direction and the currency on that particular side does not have the strength to pull the other one, do you think it will work? Let's see your answers. What are the odds that you'll clear that trade? Do you think it will work? It's 50-50. In fact, it's less than 50-50. It's less than 50-50. So if we're to take a trade, we have to make sure that the currency we're going for, right? For example, if you want to take Euro JPY for the sell, we want to make sure that JPY is very, very stronger than Euro. So once I see Euro 43, JPY 44, I don't see that as a big margin. I won't take that trade. All right, I'm not going to take that trade. So you want to see something like, look at USD card now. USD is 44, card is 28. Now, I know that USD is able to drag card, so I'll take that for the buy, for a call. I hope we all got that. Now, we want to have a comprehensive understanding of what we've been talking about tonight and see how we can put it together to actually make decisions in the market while we're trading. All right, so I need everybody to pull out their notepad. We're going to take down a checklist that you'll be checking before you take trades. It's full of questions, and if you lie about those questions, you're actually going to lose money. If you lie about those questions, you will lose money. All right, so I'll give you guys time to get your notepads out and let us take down the notes. All right, I will assume everybody is ready now. Now the first thing that is on our list, right? The first on our, just give me a moment, please. Just 1 minute. All right, I'm back. So the first question we want to ask ourselves is concerning currency strength. Now, you want to take this note is for the buy. That's if we want to take a trade for the buy, right? We want to take a trade for the buy. This is the checklist for the buy. Number one question, is the first currency stronger than the second currency? So what we're asking is the base currency stronger than the quote currency? For example, for the buy, we're asking, is USD stronger than CAD? Is NZD stronger than USD? Is GBP stronger than CHF? That's the first question. All right, is the first currency stronger than the second currency? Now, second question is, did the green arrow appear in cashtrap? Do we have a green arrow in cashtrap? All right, let's look for that green arrow. Let's see what it looks like. Let's see what it looks like before we move on. Let's see what it moves. Look at it. Look at it here. This kind of arrow. Did it appear in cashtrap? That's number two. Now, the number three question is strike price at the next support level? What is strike price? Look at here. This is telling you exactly where the market is at the time. And where do we want it? At the next support level. In this particular situation that we find ourselves, excuse me, is strike price at the next support level? No. Why? Because this is the next support level right here. All right, this is the next support level. So we want price to be at this next support level before we take the trade. So even if price is not there, but price is close to there, we can keep that question as an open question because we can actually wait for price to get there. All right. Now, the fourth question is, so now let's go over it again. The first question is currency strength. Is the first currency stronger than the second currency? Second question is, did the green arrow appear in cashtrap? Third question is strike price at the next support region? Now, the fourth question is stochastic and RSI in the green region? All right, is stochastic and RSI in the green region? I like to expand this so that I will see it very, very clearly. All right, just chill out. Let me find it. Just calm down. I'm trying to make it clear so that we can all see it. All right, so the question is stochastic and RSI in the green region? We talked about the green region here. That is this region. So we need this guy to be down here, this guy to be down here. I repeat, we need this guy, that's the black momentum line, to be down in this green region. We need this black momentum line to be down in this region. Now, the complete question for that particular stochastic and RSI is the stochastic and RSI in the green region pointing up? How do we mean? We want to look at this side of this chart. We want to have a V-like structure there before we enter the trade. What do I mean by a V? We don't want to enter a trade when this guy just entered here and it's still pointing straight now. We want to enter it when it has made this structure. When you see this structure, this V structure, that's where we want to enter that trade. All right, that's where we want to enter that trade. Now, imagine you entered this trade at the beginning of this candle thinking, oh, stochastic and RSI is already in that area. What happens? It yanks, and you took it for a call. It still pushes down. But at this point, when stochastic is already pushing up, what happens? At least you got a bit of a buy here. All right, you possibly clear this trade. So the possibilities are higher when you allow the stochastic and RSI to take the form. Now, I'm going to tell you, it's very, very possible that you'll be waiting for stochastic and RSI to give you that V form and the trade will leave you. It's very, very, very possible. So this is what I do. If when I get, oh, that's my phone. If when I get this V, I usually take a 2 minute trade, right? And this time I feel like, oh, this trade might leave me the way it's going and it has not given me my V shape. What I do is I take it for 5 minutes. Instead of 2 minutes, I take it for 5 minutes so that by the time it travels all the way down as it wants and gives the curve, I'm clearing. All right, but then if it's still pointing down like this and you enter the trade, you're gonna have to roll 2 or 3 times. 2 or 3 times. So it's best you give it time if you're scared that the trade is going to leave. All right, so now let's take those 4 questions again for the buy. Remember, for the buy, first one is the first currency stronger than the second currency? Second question is, did the green arrow appear in cashtrap? The third question is strike price at the next support region? The fourth question is stochastic and RSI in the green region pointing up or just in the green region? Do we get that? If that makes sense to you, please put some ones in the chat box. If that makes sense to you, put some ones in the chat box. If all we just said makes sense to you, put some ones in the chat box. What 31 on this call? The least you could do is to press that one for me. Thank you, thank you. Yeah, so that makes sense. That makes sense. That makes sense. Right. So now, the thing is, if all of these things do not check out, don't take that trade for the buy. Now, I'm also going to tell you, the only one thing I may not mind is the arrow. The only one thing I may not mind, but that will be at my expense. I'll know, okay, man, I'm taking this for a low risk because my points are not complete. So if the checklist is not complete, do not take that trade or take a low risk on it. But the only one you can undermine is the arrow, because sometimes cashtrap might be bugging out and it's not displaying an arrow, or it may be displaying a wrong arrow at the time. But if the checklist does not check out, or do not take that trade. Now, what about for the sell? If you want to take a trade for the sell, it's just the inverse of everything we've given you. The first question is the first currency weaker than the second currency? In this case, we're saying, is GBP weaker than CAD? That means we're saying, is CAD stronger than GBP? So that it will have the strength to pull it down. That's the first question. The second question is, do we have a red arrow in the cashtrap? Is cashtrap displaying a red arrow? The third question is strike price at the next resistance region? Is strike price at the next resistance region? All right. Now, remember we said that these red zones, these red lines that we find here, these red zones that we find here are the resistance. So we want strike price to be in that area before we can take our trade. And the final one is stochastic and RSI in the red region, like it is right now, pointing down. So can you see that stochastic is in this region, right? But RSI is not there. Now, there's something you guys would have to know. Whenever all of your points set, but currency strength does not support that trade, don't take it. You might see that, okay, RSI has aligned, it's at my support or at your resistance, but I'm showing you the arrow, but currency strength is not telling you, oh boy, this thing will go in that direction. Do not take that trade. Currency strength is the number one thing you have to obey as a trader, because it will so mess you up if you don't obey. All right, it will mess you up if you don't obey it. Currency strength is the number one thing you have to obey as a trader. If every other thing sets up and currency strength is telling you, for example, this RSI might even get up to this area, right? Stochastic is already set, and possibly the strike price might get to the resistance. But look at strength. Strength is telling me that GBP is stronger. Meanwhile, for the put, I need CAD to be stronger. Will I take that trade? No. I won't take that trade. I won't take that trade. All right. So it actually makes sense when you have a checklist that you answer to before you take a trade. Now, one thing you need to know is that it's not your father's market. It's not your father's market. After taking an entry, and then even after you've done your checklist, and then everything aligns, and then you enter a trade, it starts going south. It's not your father's market. The market has a mind of its own. It can decide to do whatever it wants to do, because there are so many factors affecting the market. News, Trump might just wake up and say something, and that affects the market. All right, so do not be surprised. Don't be like, oh, the strategy is not working. No strategy works 100%. But with cashtrap, I personally have seen a 92%. Okay, Commanders of Wealth I think we've seen about a 98.9% success rate using cashtrap. 98.9%. Like throughout our trading, we've lost very, very little trades, like maybe 2 or 3 trades, and we've taken over 70 trades. Look at that. Look at that. You know, so it's no strategy is 100%, but you have to make sure that you're doing the right things. When you're doing the right things and then the market is going its own way, all you have to do is to give it 2 rollovers. If you give it 2 rollovers and it doesn't come back to profits, let it go. 2 rollovers and it doesn't come back to profits, let it go. Else, you're going to give it all the profits you've made for the day just in one trade. All right, just in one trade. So I believe we understand how to trade. Let's see if we can find any good setup for. Now, some people might be having problems with. Okay, cashtrap. The prices on cashtrap is not the same on your broker. Let us have an example. We're looking at Gcard. Let me open my my demo account. All right. All right, so this is my demo account. You might be wondering why you're seeing 0 here. I actually had a plan to take the account to $1 and try to build it to back to $1,000. But I entered a trade that had me rolling over and I lost my $1. All right, so let's go to why we're here. Gcard, look at the pricing on cashtrap. 145, 145. That's where the market is. But let's open Gcard on our broker. Where's Gcard? 134. So you see that when you come and say, oh, if the market gets to my resistance, my resistance is at 152, yeah, and you go to your broker, it's not there. You say, I need to see well again. But the thing is that the broker that we use to design this is not the same as our broker. We use the provider called Wanda. Meanwhile, Hourglass use FXTM. So we get our pricing on TradingView. That is where TradingView comes in, guys. That is where TradingView comes in. So I'm going to teach you tonight how to, for example, if you get a zone here, this is where you want to take this trade. How do you know exactly where to get the trade on your TradingView so that you can get the exact price to enter on your broker? All right. So tonight we're going to do that. Tonight we're going to do that. We're going to see that it's very, very easy. All right. So just give me a moment. Let me clear up some things. Give me a moment. If you have questions, please write it down somewhere. We are going to attend to those questions. Okay, great. All right. Just a moment. Okay, so can everybody see my screen now? Can everybody see my screen? Yeah. All right, good. So TradingView is an online platform that you can use to also see your candles as well. All right, this helps me to determine exactly where I'm entering a trade. All right, so all you have to simply do is go to tradingview.com, tradingview.com, and then you have it. All right, tradingview.com, and then you have it. This is what it's going to look like here. This is what it's going to look like. So at this point, this area, you're going to see an avatar. Just click there and log into your Google, your Gmail. All right, log in. Once you've logged in, it will bring you back having the first letter of your email. It's going to have it there. Yeah. Then that means you're logged in. And when you do so, you come back here. It's going to bring you back to this page and you click on charts. When you click on charts, to bring you here to something like this. Okay, to bring you here to something like this. So now, how do we find those entries that we're talking about? How do we find those entries that we're talking about? For example, we say, okay, we say GBP card. We want to take it at this resistance area for the put, but here it's telling us 152. So now, all we do, we open here GBP card. Where's the market right now? This is where the market is. Yeah. So we try to trace, where is this 152? Where is 152? 152 is the bottom of the last candle. So let's look at it. Let me refresh. Sorry, let me refresh this. I think it's giving me wrong data. Okay, let's take a look at this and see how we can get these entries. Because some people keep me up and they're like, "Put your money. Oh my God, your JPY is looking like a very, very good trade. Let's see if we can take it down. Abby, we need to be rewarded for making our time to come and trade. Your JPY, if JPY is stronger, we're going to take it for a put. For the sharp fingers, you can enter. Euro JPY. Yeah, I want to enter this trade. You see, you always have to confirm. Cashtrap is telling me that JPY is 61. Yeah, but right here, JPY is dead. And if you enter that trade, what's going to happen? Oh wait, sorry. Euro, yeah, Euro JPY. I'm still going to confirm from other currency strength meter. Like currency quick. These are where you can check the strength of, sorry, I totally forgot about that. This is the site where you can check for your currency strength, livechart.co.uk/currency dash strength. That should be PHP. All right, you can just do livechart.co.uk and then to get you there, click on currency strength to bring you here. All right, this is how you check, you confirm, because some of the times this right here bugs out. It bugs out. So I'm going to use live chat to try to see if that trade is valid, if JPY is actually stronger than Euro.
Money.
Yeah, bro.
The live chat, yeah, trio pips is the same thing as that. So in case that one slows down, they can check trio pips. You understand?
No.
Yeah.
Okay. So JPY is actually Euro is actually stronger right now. Is that what you're saying, DU? All right, let's look at this. This is in the 5 minutes. It says JPY is 4.8, and right here Euro is what's it calling out here? 4.6. The strengths are close, therefore I won't take it. Euro JPY. The strands are close, therefore I won't take it. So, but it's not a bad one though. It's not a bad one. So now I was talking about let's get to the main juice of what we're doing here. Now, the reason why I wanted to take this trade is because in my head I've already seen that all my questions check. Just one that is remaining. All my questions check. My stochastic is in the area. My RSI is in the area, and I was thinking that JPY was stronger than Euro. It's at my resistance region. Checks. That was why I was interested in taking that trade. All right. So how do we know where to take a particular trade? For example, we have this one on deck right now, and then we see this area. So how do you know where this area is in your trading view? How do you know where this area is in your trading view? It's all about how you like to represent your things. For me, how I'll look at this is I'm going to look at this candle. Yeah, even if this candle has not gotten here yet, I'm going to look at this candle. Yeah, right. I'm going to look at this candle. I'm going to say, oh, okay, it's at the base of this long candle, right? And I'll come to this Euro JPY. I'll look at this long candle here. It's the same long candle. I'll say, oh, it's at the base here. And what do? I mark it. I go to this place. I get my horizontal line. I come to the base of that candle and I mark it. And you see it. So what's the price? 487. If the market gets to 487 and JPY is stronger than Euro, it's market. It's going to dip. Do you see how I got that? Now, apart from that, I'm also going to make life very, very easy for you. Super easy. No stress. You don't even have to come and start doing all this tracing. It's what is called the Ivan Cabral strategy. Right? The Ivan Cabral strategy. Put it down in the chat box with you. Ivan Cabral strategy. Ivan Cabral strategy. How do we go about that? Yeah. How do we go about that? Just give me a moment. Let me do something. All right, great. I hope everybody can still see my screen. Can everybody still see my screen? Let's just talk about this Ivan Cabral strategy that, can you see this thing is actually tanking, but I had no confidence in that. Yeah, I had no confidence in that.
Price action, bro.
Strength wasn't on our side. Yeah, this is price action right now. Well, strength wasn't on our side. Everything says it's going to reverse, but not strength. Right? I like to prepare. I like to trust strength better than every other thing. Euro, JPY. All right. So I was saying something. Wow. Wow. It was a nice one. It was a nice one, but I wouldn't have even taken it. Because
Who
right
took
now,
it?
Euro is stronger. Who took it? Who took that trade? Who's that coconut head person that took the trade? All right, so let's go straight to the point where it's getting late. We go to what we're trying to get. Oh, Temitope took it. Wow, nice. I'm sorry you're clearing. So what we're trying to get is to get all of this line so that we can start determining our entries on cashtrap, on trading view rather. Temitope have cleared. Nice. So what we do is we come to the indicators and we go to the indicators, we type in Ivan Cabral. Now look at it. This is it right here. Don't click here. Don't click here. Just click on it. Exactly. Once you click on it, look at what happens. What do you have here? Support and resistance. Can you see that it's the same place I marked up before that this support resistance is? It's giving you exactly the same things you're seeing here on cashtrap. So once you see it there, you come on your cashtrap on your trading view and say, oh, what's the price? 485. If the market gets to 485 on my broker, I'll smack it. But if you go to your cashtrap and you're trying to get the price, what is it giving you? 481. But on your trading view is 485. Now, if you enter 481 on your broker, it starts to spiking up till it gets to 485, and that will scare the hell out of you before it starts going back down. Right? So, so that actually makes sense to you guys, I guess. So, to round this up, we're talking. I said we're going to talk about the EMA. This black line. This black line serves as a support, dynamic support and resistance, but it also serves as a magnet. It's also a magnet. Look at this right here. Did you notice that when these candles got close to this place, right? Can you see that there's a support area here? Can you see this support area, right? If we put the line, just chill. I'll put the line, make it visible for you to see. Look at this area. Now, when these red candles were coming down, maybe we were hoping that it was going to hold, but because this black line was closed, it was dragging the candles. Can you see? It dragged it. And where did it get up to? It got all the way down here. The same thing, you notice that these candles were playing close to the EMA. What happened? It dragged it. So now the question is, when you're trying to take a trade, for example, if the candle is somewhere around here, right, and this EMA is here, and you have a price here, don't take that price. Take the price after the EMA. Take the price after the EMA, because it's actually going to drag it up. Even if everything aligns, even if your stochastic, everything aligns, but you see that candle is very, very close to this black line. Yeah, know that black line, it's either of two things it do. It will either serve as a resistance, that's if the candle is going up, or it's going to drag it. All right, and when it drags it, what happens? The candles goes up. Remember, it's still a magnet. It's going to drag it back down. All right, so it's better you take it at that top entry, which is your nice place, than taking it in a very, very risky position. A very, very risky position. I hope we understand that. I hope you understand that. If you understand that, please put some ones in the chat box. If you understand that, please put some ones in the chat box. If we're getting value tonight, please put some ones in the chat box as well. We're getting value tonight. If you love what you're hearing, if you're understanding what you're hearing, please put some ones in the chat box. Nice. All right. I feel like there's something I'm leaving out. Yes. This is basically all you need to succeed in cashtrap, using cashtrap to take your trades. All we've said tonight is basically all you need to succeed. But there is one more thing. There's one more thing. It's something we don't usually give out. We gave it out in the last class, but we don't usually give it out. Should I give out the confirmation candle? Should we give it out tonight?
Share it for them.
Should we?
Yeah,
all right, let's
sure.
go. Now it's a trick I learned from Brandon Boyd and Josh Lee. Is it Brandon Lee or I don't even know. I don't even know their names, but I know it's the Brandon and Josh there. All right, so what's happening chat box. Let's see. All right. All right, let's see what's happening in the chat box. What you just explained, is it the same as the slingshot strategy OBG talks about? Exactly. Collins, here. You should be grateful you were on that call. It's the same slingshot that OBG talked about, yeah? So, so talking about confirmation candle, that's what we want to talk about right now. Now, one thing that this confirmation candle does for you is that it helps you be a better trader. You don't enter trades and you start shouting, away, away. You don't do that because you got your confirmation candle. All right. So how do you see your confirmation candle? Now I have Euro JPY. Remember, we had this piece marked up. We had this 485 marked up. But what tells me that when we were on this particular green candle, what tells me that this candle is not able to break this place? What assurance do I have? It's not my father's market. The candle can decide to break it, but what assures me that it won't break? Yeah, it's the confirmation candle. All right. How do we get the confirmation candle? We go down to the 1 minute time frame. Trading view, if you have something like this, either D, then an arrow by the side. Once you click on it, you have all the time frames. Usually we trade on the 5 minutes time frame. If you look at cashtrap here, you will see here 5M. It means all these candles are 5 minutes candles. All right. So usually we go down to the 1 minute candle. Now, I want your eyes to be very, very open. This is the area where we. Sorry, let me clear out some things so that it will be very, very plain for us to be seen. Let me clear out some things. Just a moment. I want to take away some noise. That may be disturbing us. All right, great. So we are left with just our support and resistance. Beautiful. Now, remember we stepped down to the 1 minute candle. Now, this was the price. It was on this candle we were waiting for it. Now, what assures us that this trade was actually going to reject is a confirmation candle. This red candle is our confirmation candle because we want it to go down. All right. So we want it to go down, and that is why it is our confirmation candle. Now, when we see this rejection on the 1 minute, we know, oh yeah, this thing is actually going to go down. But when do we take the trade? Look at the timer. Okay, I think the timer is not showing. Why? Why is that? Why is the timer not showing? Timer is not showing on the 1 minute. I possibly have messed up something with my settings here. I like to play around with trading view a lot. I possibly have messed up a setting or something. I certainly have messed up, but this is what I mean. Now, at the close of this candle, this particular red candle here, I hope we're all paying attention because this is very, very crucial. At the close of this candle, you'll be seeing the timer on this, just like we see it here now on the 5 minutes. Look at the 5 minutes. The timer is gone on the 5 minutes again. Okay, possibly because it's trying to open another candle. Sorry. We're trying to open another candle. Let's just hold on a bit and see if it does open another candle. Notice that this has been stuck here for a while. It's trying to open another candle. So, but let's go ahead till it's out. So at the end of this candle, remember we usually have timer now. Our timer is on our strike price, under our strike price like this. Now, remember this is the 1 minute candle. So this counts down. Each candle counts. Okay, look at it now. So I don't take the trade until this candle is remaining 1 second. 7, 6, 5. I go to my broker, I enter. That's at the end of this candle. Now, the reason why we don't take it when the candle still has 10 seconds is because it's very, very easy for a candle to flip. Within 10 seconds, this candle can turn to a green candle, and that's no longer a confirmation candle. If you want to take a trade for a put from your resistance, you need a red candle. The red candle is your confirmation candle. And if that first candle is not a red candle, if it's not a red candle, you can't enter that trade. If it's not a red candle, you cannot enter that trade. It's not confirmed. But we got a confirmation candle and it closed here. At 1 second, I'm going to enter that trade. If I had entered at 10 seconds, it's possible that this thing will flip and it's a green candle. And what do? Trade is gone. So I wait till the very, very last second. I enter the trade at this bottom. My broker. Now, notice what happens. The market tries, and look, this strategy works with 3 minutes. Strategy works with 3 minutes, yeah? Now, the market tries to scare us. We enter the trade at 479, right? The market tries to go up to 482. But see what happens on the next 3 candles. Remember that each of these candles represents 1 minute. Now we enter the trade. On the first 1 minute, it goes where? Up. But look at the next 3 minutes. We enter the trade for 3 minutes. 1, 2, 3. Who's smiling right now? Who's smiling
I'm
right
smiling. I'm smiling.
Kini, don't worry. It's probably because it's look at my timer is showing right now. Timer usually doesn't show when a new candle is trying to form. But you see how beautiful this thing is. Do you see how beautiful it is? It works like crazy. The same thing for the support. We used it here. It works like mad. It works like mad. It works like mad. Now look at this support area too. We have it marked out. Now, when, for example, let's say we'll be monitoring this candle and we'll say, oh, okay, once we receive our confirmation candle, sometimes it's going to scare you, honestly, sometimes it's going to scare you. Once we receive our confirmation candle, we are going to enter this trade. Now, this candle buys, let me try to zoom in a bit so that we'll be seeing these things very, very well. So that it's not as if it's story we are telling. All right. So this candle buys, it goes all the way up. But imagine it got all the way up here. It's not yet 1 second, maybe it's remaining 10 seconds, and you enter that trade. And the candle data come down and close here. You know you're in a loss. But if you allow this candle to close at this place, 1 second, you enter that trade for 3 minutes. What does it do? For the buy, you enter it for the buy. It tries to scare you a bit by going down. But remember, this is 1 minute, 2 minutes. Where do you clear? 3 minutes, right here. Who's smiling again?
I'm laughing.
Who's smiling again? You see that? You see that? You see that? So this is a real source right here. This is a real source. This will make you more money than you ever think of. Yeah. This is going to make you money right here. I call it the confirmation candle strategy. I call it the confirmation candle strategy. All right. So it's super easy to understand. Super easy to understand. Super easy to get. All right. So for example, if I get the candles back to this point, I'll wait for a red candle. As each trend supports what I'm doing. I'll wait for a red candle. Once I get my red candle, I enter. And 3 minutes fixed time on is going to clear. Well, now let me tell you something. Like I said before, Collins, you didn't quite get the explanation. I'll take it again for your sake. Like I said before, no strategy is 100%. No strategy is 100%. So sometimes with this strategy, I go like 10-1, 10-2, 12-1, 12-2. All right, it's not bad because I'm still in the green. It's not bad because I'm still in the green. So I'll explain that again. Collins rather. Now remember when we were predicting this trade, we said if the market comes to 485 that we're going to take it for a put. But what assures you that when this candle comes here, that it doesn't have the strength to break here? It's not your father's market. There's no way you will know. All right. So what you do is to wait for this candle on the 1 minute, because this candle here represents 5 minutes of time. Therefore, you need to see what is going on inside this candle. And that's why you step down to the 1 minute. Now, the 1 minute shows you 5 candles in one. Do you understand? 5 candles in this, this candle here contains 5 candles of the 1 minute. Now, if you go to the 1 minute, it isolates them so that you see what is happening on these individual candles. So when you step down, all white, can't stand, all right? So market gets up to this point, you're not convinced that if I take this trade here to go down, you're not convinced. What you do is you wait for this candle. This candle tells you, oh, I will go down. I'm rejecting at this point. You allow the candle to close. That means the timer should be remaining maybe 0.2 seconds. That's 2 seconds, you enter the trade. But I like to guide it at 1 second. And it's at that time I usually split my screen. I have my broker here, I have my trading view here. All right. So once it's 1 second, I enter the trade at this point for 3 minutes. Now, see, it starts to trade. This is where our 3 minutes start to count. 1 minute. In the first 1 minute, what happens? The market goes up. Tries to scare me. But in 2 minutes, the next 2 minutes, it comes down. The third minute, what happens? It comes down. We clear our trade. It's beautiful. The same thing here. Assuming we marked out here, we take, this is our first candle here. It closes here. We enter 1, 2, 3. We clear our trade. Because we entered here, we clear on this candle. Do you understand? Look at this one that we just missed as well now. It gave us a confirmation candle. Look at it. You enter at the close of this candle. 1, 2. Possibly the third one is going to be down here. You clear. It's a mad strategy. And if you try it out, it's going to make you a lot of money. All right. So,
But this strategy has to do with the next candle, right? Not the previous one.
it has to do with the next candle in your direction. Remember, market is buying, but you feel like if it gets to a particular point, it's going to sell. So the next candle has to be a selling candle. Do you understand? It has to be a selling candle. The same way market is selling.
Yeah, what I'm saying is that this confirmation candle has to do with the next candle that is starting. You understand?
Yes.
Okay, that's the question. Yeah. Thanks.
Yeah. So it's not as if you enter a trade on this at the close of this candle that is counting on this candle, it starts counting on this next candle here. All right, and that is 1, 2, 3. You've cleared. The same thing here. You enter at the close of this candle. 1, 2, 3. You clear at the top of this place. Let's see what's going on in Starbucks. Collins, do you quite get the explanation now? Yeah, so Angela, that's why I say use 3 minutes or 5 minutes. Use 3 minutes or 5 minutes. All right. Yeah, it's actually an eye opener. Yeah, you can watch this video later. It's actually recorded. So I believe with what we've covered this night, everybody should be able to take trades on their own using cashtrap and trading view. Using cashtrap and trading view, you should be able to take trades on your own. So right now we're going to be taking questions because yeah, you're welcome, Angela. Jennifer, yes, you can watch this video later. So if you want to ask your questions, I'm actually going to stop recording right now. Or should I leave the record running for the question? you want to ask your question, you can simply just raise your hand or type me in the chat box, and I will unmute you to ask your question. All right. Raise your hand in the chat box or type me, ME, in the chat box, and I will unmute you. I will unmute you. So I'll stop recording my end.